conversion of a capital asset into stock and trade. Again, let's first understand what we are trying to deal with in this case. Now let's say, for example, there is a person, and let's take an individual only. This individual basically bought a car, right? Now from his perspective, a car is what? A capital asset, right? After 2 years, he decided, let me get into the business of purchasing and selling old cars, right? So let's say this is year 0, this is year 2, and what he did was that he pulled in this car also into his business, right? Now once this car is pulled into business from a capital asset, this became a stock and trade, because now he is into the business of purchase and sale of cars, right? So it became a stock and trade. And in year 3, what he did was he sold the car, right? Now what is dealt with in this section is that whenever an assessee has a capital asset, right, which he converts into stock and trade of a business, and subsequently he sells it, how will the entire scheme of taxation work, right? The first thing is that whenever you convert this capital asset into stock and trade, this event is liable to capital gains tax, right? Why? Because this is treated as a transfer of a capital asset, right? Although the tax has to be paid only in the year when this car is sold, right? The second thing is, let's say for example, he bought the car for rupees 500, right? And the date when this conversion happened, let's say the fair market value is equal to 800, right? And finally when he sold the car, let's say he sold it for 1000. Okay, so the first taxation event happens on the date when this conversion happens, and the second happens when this car is actually sold. The only difference is that the difference between this 800 and 500, which is nothing but the fair market value on the date of conversion and the cost of acquisition, is taxed as capital gain, and the difference between the actual sale consideration and the fair market value on the date of conversion, this is taxed as business income. Now let us read the technical stuff. Okay, profits or gains arising from conversion of a capital asset into stock and trade. So you converted the car, which was your capital asset, into stock and trade. And what were the profits? Profits were basically the fair market value on the date of conversion minus cost of acquisition. So in our case it was 800 minus 500, 300. I'm assuming there is no indexation, and this is cost of acquisition is the index cost of acquisition. If there is indexation, this 500 will need to be changed accordingly, right? So profits or gains arising from conversion of a capital asset into stock and trade, or treatment of such capital asset as stock and trade of business by assessee. So what we took was that these are one and the same thing, okay? Shall be chargeable to income tax as income of the previous year in which such stock in trade is sold or otherwise transferred. Just be a little careful that the taxation is not in the year of conversion, it is in the year of when it is sold. What will be the sale consideration? For the purpose of this conversion, fair market value of the asset on the date of conversion is treated as sales consideration. So this was 800, right? And capital gains are computed by reducing from sale consideration the cost of acquisition or index cost of acquisition. So we took 500 as the original cost. Subsequent sale, so once you have converted and treated it as a stock in trade of business, when you sell stock, fair market value above to be treated as cost of acquisition. Now your cost of acquisition will be 800 and not 500. This is also, if you see logically, if you treat 500 as the cost of acquisition, what you will do is you will tax 1000 minus 500 is equal to 500 as tax. 500 you've taxed here, 300 you've taxed here, whereas in reality, if sale consideration is 1000, this is 500, the capital gain, the gain is only 500. Hence, it is only fair that this fair market value is treated as the cost of acquisition. And the difference between the two, which is my 1000 minus 800, which is 200, is treated as profits and gains of business and profession. Right?